Good morning, everyone. Welcome to our third session of the Small Business Workshop here at the Mesquite Chamber of Commerce. Today, we're going to talk about how to become bankable, and also with a bonus session on business grants. Y'all are in for a treat today, and those of y'all tuning in, y'all are in for a treat. And all of the speakers' information will be available so that y'all can reach out to them, but also feel free to give them live questions. That's why y'all are here, butts in seats. Y'all have that full attention of our speakers here today. As always, let me see. I just want to talk a little bit about what's coming up. So today is how to be bankable. We're going to talk in December about community relationships. We're going to go through marketing strategies, creating customer loyalty, business taxes, and your continued business growth. Make sure you are at all of these because it is part of your business success. As always, this program would not be possible without our two sponsors. And you're going to hear way too much from one of them, which is Julian Moolman with Spectra Bank, because he's one of your speakers today. But I wanted to at least get a chance to our other sponsor, Brandon with America's Credit Union. Why don't you come up here and just talk a little bit about America's Credit Union?
Thanks, Alex. I appreciate it. Well, good morning, Chamber. My name is Brandon Cooch. I'm the Director of Business Development for America's Credit Union. We are a co-sponsor with our friends over at Spectra Bank for this Small Business Workshop. Guys, this has been such a blast working through this with you guys. We have been so passionate about the things that are going on in the city of Mesquite. And when we got together to kind of develop the game plan for all of this, it was what are the important things that small business owners, the heartbeat of our communities, what do they need to know about small business ownership? And coming from the financial industry, we have a little bit of a different perspective on it, but equally as important. So a little bit about us as at America's Credit Union. We are a credit union, so that means we are a not-for-profit financial institution. We primarily target individual consumers. So we leave all of our commercial lending and business banking to our friends and co-sponsors at Spectra Bank. But we're here for any of your individual banking needs. So whether it's personal finances, whether you have credit card needs, checking account needs, personal loans, mortgages, auto loans, you name it. We can take care of you, we can take care of your employees, and we would love to be here to help. We've been out here in Mesquite for quite a while now, and we're just really passionate about the people that live, the people that work here, and of course our small businesses. So we are just so thrilled as we continue to go. We're going to have the opportunity to present on a couple of our topics later on in the year. So please continue to be here, continue to take notes, absorb it, enjoy every single bit of this because these resources are really invaluable. So again, thank you guys so much for allowing us the privilege to be here. Again, my name is Brandon with America's Credit Union. And with that, I will pass it over to our sponsor today, Julian.
All right. Well, good morning. My name is Julian Moolman. I'm a commercial lender with Spectra Bank, and we'll be talking about how to be bankable. How to be bankable is quite a big deal for any small business owner. You know, you walk to a bank and you're looking for funding potentially. It's a very important relationship in building your business and ensuring your success for the future. So being bankable is a highly subjective term to me. And what do I mean by that is it'll depend who you ask and when you ask this question. Your banker will think one way, your CPA is going to think another way. You may deal with this with the SBA at one point and they will have a certain expectation. So two key factors to being bankable is having a good banking relationship and creating your loan package. That's very, very important when you are trying to access funds. So in order to qualify for financing, you will need to organize your loan package, and that's one thing I'm going to focus on today. As I've mentioned, it's really, really important for your success, and it'll remain similar throughout the process, whether you deal with my bank, another bank, whether you deal with the SBA, that process really doesn't change. Now, any potential customer or borrower that has a well-organized loan package, you're ahead of the curve, and you will significantly shorten the time from application to decision or approval and to funding. And one thing I will just point out, and we talk to all of our customers at our bank about this, and that is being responsive to your banker. That is very, very important. We pride ourselves on being very communicative with our clients, and that's why we hand out our cell phones. Our customers can text us, email us, call us, whatever you're comfortable with. It's just being responsive to your banker. I mentioned banking and relationships, super important. We live in very highly regulated times, so having an established relationship with a bank will assist you in your need for your funding. Banks use know your customer as a basis, and we really use that in our bank. We're a relationship-based bank, and we're also a character-based bank. So it is really important for us to form that relationship with you, because we become familiar with your consistency, your performance of your transactions, your credibility, and then as well as your business trends. Another key factor to being bankable is growing your assets. What type of assets does your business possess? When you're starting out, it's more than likely going to be the cash that your business generates, and that is important to keep that in the bank. So having a business bank account where your sales are regularly deposited into, that helps build collateral for your business. And as your business grows, you then continue to invest in your assets such as property. Other financial instruments would also help to further develop that asset base of your business. Another really important thing for a small business owner, especially starting out, is maintaining accurate and up-to-date financial records. That is very, very important, and that's going to be a key aspect and part of your loan package when you go see your banker. You could do it yourself. There's a lot of software out there. I'm not going to speak to that because I'm not an accountant or a CPA, so there's a myriad of products out there that you can choose from. Ultimately, I would say that you need to speak to a CPA or an accountant, discuss your business, your industry you're in, the size of your business, and then you make that decision based on that. Best practices, as I said, would be get a professional opinion before proceeding on your own. That's key for us, because if you don't understand a basic profit and loss statement or a balance sheet, that's when you need to go talk to an accountant or a CPA. So as I mentioned, creating your loan package, that for your banker is one of the most important things you could have. This also helps you organize your business, it helps you organize your financials, and it makes you loan ready. So the list of the items I'm going to talk about on this page, it includes, and then in the next couple of pages actually, is business and personal financial documents that will be required by a bank, the SBA, or another lender. Let's say you intend to work with a private money lender. That's another option as well. Could be a little bit more costly, but that is indeed an option. So all of these documents we're going to discuss helps the financial institutions, assess your current financial position, and it also helps us look at your personal guarantee, because as a small business owner, you're going to guarantee the loan. So the required business documents for any loan package, as I mentioned earlier, that stays very similar throughout the process. Doesn't matter who you deal with, we are all going to ask similar questions or require similar documentation. So a complete business plan and projections for a new business or for a business expansion if you're targeting growth in a certain area of your industry. That's very important. The SBDC did a great job in the last 2 presentations talking about how to do that, how to create a good business plan, how to do your marketing strategies and whatnot. So another big item is entity formation documents. Those are very important for us, and you need to have copies of those ready at all times. Your bank can access it off the state website, but if you can provide it ahead of time or with your loan package, that is going to shorten time for us researching into your business as well. Franchise tax status, that's another document we will pull as a bank on your behalf, but it's something that you as a business owner need to make sure. If you do not make the required amount of income in the state of Texas, make sure that there's a zero tax filing completed for that. Otherwise, your business status will become inactive, and that delays the process again for you. EIN numbers, that's your employee identification number. That's issued by the IRS. That is a requirement for any bank because that is a tax ID we use to associate with your business. So very, very important document. Keep it on file, keep a PDF copy, so part of your loan package. So there's a slide later on in the presentation. I kind of show you how we do it at the bank or how I do it, keep my records so that I can access it at any time. And as every year or every quarter goes past, you can add in financial statements and tax returns. So accurate and up-to-date financials, I've mentioned on the previous page, accurate financial record keeping is very, very important. You need to have your most recent year to date, which is a full calendar month, P&L and a balance sheet if the banker asks for it at that point in time. You have it ready, normally about a month delay after the previous calendar month. It gives you enough time to complete it and make sure it's accurate. At Spectra Bank, we require 3 years of business tax returns. It shows us your consistency, shows us how your business has performed over the past 3 years. And if you think of where we are today, COVID had a huge impact on business tax returns. So we all look at that, we all understand what happened in the economy and what happened, well, globally. So we would want to see how you did prior to COVID, what happened during COVID, and how you've recovered since COVID. So that is very important if your business has been around that long. Obviously, if it's a new business, that changes things quite drastically. So all your tax returns need to include your most recent year available. And if you filed an extension, which most small businesses do, just send your banker a copy of that so they know that your CPA or accountant or you've self-filed, that you've actually have an accepted extension from the IRS. That's very important. As I mentioned previously, commercial banks normally require 2 to 3 years. We at Spectra Bank require 3, and it's generally an industry standard or an industry standard requirement that we ask for at least 2 years operating history. There are exceptions to that. It is currently becoming a little bit harder for some banks to do that, but if you're, for example, if you're a very, very strong guarantor and your business has been around for 18 months or maybe just shy of 2 years, that doesn't mean you're automatically disqualified from getting a loan from a bank or from a private money lender. There's always an opportunity. Find the right person that may be able to assist you in that situation. Your most recent business bank statements, if you currently bank with another institution, it's really important to save your monthly statement and have that at the ready for your banker as well. Show us a couple of months worth of statements because that shows us you have the liquidity to close on your request. It also shows us consistency in how you handle your business bank account. On the personal side, again, we're going to ask you for, at Spectra Bank, we'll ask you for 3 years worth of personal tax returns. Some banks may only require 2 years. It really depends on the institution itself. But as I discussed with COVID, has still being part of how we assess your financial position, I think it's important to give 3 years worth of tax returns just to show how you've either stayed consistent or how you've recovered during the trying times we've had. Personal financial statement, that is a document you need to complete in its entirety. And if you're not sure, always reach out to your banker. Ask your banker what is required because our PFS, for example, is a 4-page document. It seems very complicated, but once you've gone through it one time, it's really easy to fill out and you will become accustomed to it. The SBA PFS format, personal financial statement format, is widely accepted by banks, and in most cases this format would help avoid having to complete another lender-specific format, again, just speeding up your process in your loan application. So that's always a helpful thing to have on hand. You can download it off the SBA's website in PDF, and I believe it's a fillable PDF document, so that is pretty handy to have that. So supporting documents to verify assets, your bank statements may be included, marketable securities you may have, a life insurance policy, mortgage statements, because you do receive all of those on a monthly basis, except perhaps for your marketable securities that may be on a quarterly basis. Just make sure you have the most recent statements on hand and available to share as part of your loan package. Another big thing that we in community banks and depending on some credit unions too, is your resume. Your resume helps us understand your experience in specific industries, your business management, operational backgrounds. And having a strong resume is especially helpful if you're staying within the industry when you're opening your new business, because we can see that transition from an employee to an employer, and that helps us understand where you're going, where you've been, and ultimately I think it will contribute to your success as well. Have a color copy of your driver's license, preferably in PDF, and if you need, put passwords on your documents and share that with your banker. Do not email it, call your banker and tell them what the password is, and that helps us protect your identity as a bank, and it helps you protect yourself as well. So the main one I saved for last is ensuring that your personal credit is in order. I said in order. I mean, what I mean by that is have your personal credit in good standing. Banks will not lend to a business if the guarantor does not have good credit. That creates an instant challenge, and could be another delay unless you work on your credit and you fix it. And at this point, most banks are looking for around a 700 credit score. There are exceptions. A big equity contribution may be one of those, but for the most part, having good credit is essential to showing us stability and consistency in your personal finance, and that normally reflects to your business as a small business owner. All right, I mentioned organizing your loan package. So create a bank folder on your laptop, on your computer at home, and have these documents. When you get these statements in, create a PDF if you don't already print to PDF off of specific websites, and create these little subfolders. For example, under account docs, we would put in your business financial statements, for your bank account statements, sorry. We would put in your personal account statements. You can set this up either way you want. What you see here, you can create these subfolders under your assets. Let's say you already operate a business, you have a few different machines that you're operating. Have a statement if you have a loan on those. Have that in there. Have a valuation if you're looking to refinance those assets. Business financials would include tax returns, annual financial statements, whether your lender requires quarterly, semi-annual, annual business financial statements. Have those ready. And any other, necessary documents you feel that, or that your lender sends out. For example, we send out a list of items at the beginning of our application process, and we explain in detail why we ask for each of those documents. And once our borrowers come back to us with their loan package, if you have it set up like I'm showing on this little slide here, that'll save you quite some time having not to sit and gather all the information and trying to compile a loan package. So this is a key item for us as bankers. We do require this. We like an organized client because we want to help you as fast as we can. We don't want to create unnecessary delays. A couple of additional comments on this is, again, ensure that you're responsive to your information requests from lenders, whether it be a bank, a credit union, a private money lender, a grant writer, for example, and other sources of business support. Make sure that you're responsive to those people, because ultimately we are all going to work together. And when I mean other sources of business support, that may be your insurance broker. Your insurance broker is going to communicate with your bank, because we're going to require insurance on that. So make sure that you're responsive to all of those people, because those are all required elements of a loan with a bank or with the SBA or even private money lenders. So another big item that I would recommend you do is create a list or a record of your banking history. This shows the banker, it also shows a grant writer, for example, that you've got an established relationship with financial institutions. And if you don't have one, ultimately that's just a quick conversation with your new banker. Say, you are my first business bank that I'm working with. Then obviously this changes things, but do discuss your personal financial history and banking history. Another great thing that we advocate on, and I try and do as much of this as possible and help people where I can, is alternative funding for equity. If you do not have the equity to start up with this business, utilizing a government grant's a great source of funding to secure the equity required for your financing. Neil Reid from Grants for You came with today. He's going to be the additional speaker here, and he is going to go into quite a bit of additional information pertaining to grants, and I'm going to let him talk about that. That's basically it for being bankable from a lender's perspective. I try to keep this simple. I don't want to overcomplicate things and throw too much information at y'all. And if any of you have questions, I'm happy to go back into a slide, answer questions. And yes, ma'am.
I have two questions. The first one regarding mentioned something earlier about, I think it was after the driver's license. Then you said something, you said that the driver's license should be in PDF form.
Yes, ma'am.
And I was writing notes. Then you said something about password and.
Oh, right.
So I got confused.
So on PDF documents, when you're sharing, for example, a tax return or your EIN from your business, those all contain sensitive information. Your tax return has your social security number on there. So we'd always recommend setting a password on that PDF document if you have the ability to do so. And share that password with your banker over the phone. Please do not email it to them or text it to them, because somehow someone's going to get into a bank system, and it happens. And ultimately, we are responsible for your private information, and we want to do everything we can to help you protect it as well. Whether you do business with my bank or with any other bank, even the SBA. Well, speaking of the SBA, if you're going to work with the SBA, you're going to work with a bank. So it's basically the same thing, and it's all about protecting your identity.
Thank you, that makes sense. And then the second thing is, I was trying to write the list of the docs. I think it's your next slide.
Right.
And I would like to take a picture of that one. The specific organization.
Oh, the organization? Absolutely, I can put that up. And if any one of you would like for me to share some of these slides with you, I'd be more than happy to do so. Just take my card at the end of the presentation, and I'll be happy to email it over to you. That way you don't have to write it down or take notes. This is not proprietary information. This is my opinion. Any other questions?
Thank you.
No, not a problem. Yes, ma'am.
For the liquidity to close, does that depend on the amount of the loan that you get?
It will depend on the amount of the loan, and it will also depend on what type of loan you're doing. For the most part, you're more than likely going to look at a 20% equity contribution for a conventional loan. If you're going to work through the SBA, you're looking at about 10%. So the equity requirements really will depend who you work with and the loan type. If you work with private money lenders, it may be a little different as well with them, but your interest rate is going to be much higher. Potentially. I'm not saying every private money lender is going to be expensive, but they tend to be a little higher on interest rates. Yes, ma'am.
So when you were talking about the credit score,
Yes,
two
ma'am.
questions on that. One,
Yeah.
you kind of cited a number.
Right.
And then just repeat what that was. And then also, in your company, do you all work with candidates to try to figure out, okay, this is how we can, here's some suggestions of how what might help you get your credit score improved, and let's look at doing that before
Right.
you make the final
Yes.
submission.
So to your first question, it's normally 700 is a credit score most banks are looking for. As I mentioned, there are exceptions to that. It's customer dependent, borrower dependent, ultimately guarantor. So that's one item. If we have access to your credit history, if you're going to share that with your lender, perhaps they can discuss it with you. The only way a banker can really tell you exactly how to repay your credit would be by pulling your credit. So in that instance, I would normally recommend a credit repair company, a local company, not a 1-800 number. It'll be someone in McKinney or someone in Allen that we've worked with for many years, and we'd recommend that to our clients. Right. Yes, ma'am.
Just to pick your brain, I don't know if it was already mentioned, but what is the difference on conventional loans, FHA loans, and is a conventional loan better in
Right.
some sort of?
So, are you referring to mortgages? Okay, so mortgages would not really fall in my bank's portfolio. We do not provide any consumer lending, but I would be happy to answer that question outside of this for you. Yes, no problem. I used to be a mortgage lender, so.
I have because I was in the process of purchasing a house, and they said, well, someone had a conventional loan and they kind of overrode you, and I was like, why? So I'm still kind of curious,
Right.
and that just happened last night, so I was
All right.
kind
Well,
of.
I'll be happy to answer your question if I can.
Thank you.
Yes, sir.
Why don't you touch a little bit on, after talking about different loan packages, what's the difference between conventional loans and SBA loans?
Right. So conventional loans, pretty much set by your banker. We can work with you. We're a little different. Most community banks can do this. I know bigger banks can do it as well, obviously. But your terms, whether you want an extended amortization or a balloon note, we can work with you on that. We determine your rate in-house. So that all will depend on what type of loan you're doing, what type of collateral's involved, the length of your loan or the term of your loan, and if we, like I said, if we create a balloon note for you. So all of those will factor in to your rate. With the SBA, it's a little bit different. If there are two types of SBA lenders. Now, I'm not an SBA expert, so I'll speak to what I do know. What I do not know, we will not discuss. But you have preferred SBA lenders and you have non-preferred SBA lenders. So for instance, my bank, we are not preferred SBA lenders. All that means is we co-underwrite your loans with the SBA. So, and we prefer to do it that way because it creates an additional layer of security for us as a bank when we underwrite your loan, because there's a whole nother business looking at your financials, looking at your loan package, and then looking at the commitment. SBA rates is determined by the SBA for the most part. And again, on that, Alex, I'm not the best person to answer the question on rates specifically for the SBA. On conventional, as I mentioned, that's really determined by your bank and your lender or a loan committee. So, right. Anything else? Yes, sir.
You hear about credit repair companies. Do you know if they're effective or not, or what do you know about that?
Honestly, it depends on who you use. I'm not at liberty to mention a company that I normally recommend out because I don't have a business agreement with them, but they have been very successful in helping clients repair their credit in the past. And I've worked with a specific company for going on 7 years, and I would happily recommend any one of you, if you ever need services from them, they are great at what they do. Right. All right. Well, with that.
No, I have no more questions.
Right.
All right. So if you were going to leave these fine folks here with 1 to 3 things they should start doing today, so that they might not be bankable and loanable tomorrow, but in a year from now, 2 years from now, what are the things they need to start doing today, tomorrow?
I would say start your business relationship with a bank. Go start that business relationship first. That's important. Now, whether you decide to go work with a big bank, that'll have an effect. A smaller bank will have a different effect. A credit union may have a different effect. Some credit unions do business banking, some don't. And that's ultimately your choice, but I would say start that deposit relationship with a bank. They become familiar with you. They see what you do, how you run your deposits, how you manage your account. That is really important. The second thing is being organized, and it's this slide that is still up. It's create this from the start. And as you grow your business and as you have more success in your industry, you compile all of that in your loan package. Whether it's financial statements, bank account statements, a new marketing strategy, a new business plan, all of that needs to go in here. The more organized you are, the better opportunity you're creating for yourself down the road to actually secure funding from a bank and grow your relationship. So whether you take a loan with a bank you started your deposit relationship with or not, that's not really going to have an effect. It could be to your benefit. If you're with a small bank, you've known your banker for 2-3 years. Some people know their bankers for 20 years. And that's a great relationship to have. So those are the two main things I would say. Have those ready. And the other two key things was through the SBDC. Starting in the right place is getting your business plan together first. And then it's understanding what are you looking for, when do you need it, and as you go through this, it'll tie back to your relationship with your banker, because your banker can also then say to you, right, you're 18 months or 12 months into your business, this is what we're going to need to see going forward in order to actually get you across the finish line with a loan and get you to the closing table. So that'll be my key factors for any small business owner, is just have that ready and keep adding to it. Do not stop adding to it. So, right. Thank you. All right. Well, with that, I'd like to introduce Neil Reid from Grants for You. He's a good referral friend and partner, and I believe he'll be adding a great amount of value to your businesses.
Well, thanks for letting me come and join you today. We're going to talk about grants at a high level. Happy to take questions, happy to meet with you afterward and do one-to-ones. A question I get asked a lot is, what is a grant? Well, it's not a loan. The foundations don't take an equity position in your business. They don't. It's kind of like when we went to college, only you got those grants, only it has more zeros. That's kind of what it's like. There are requirements for them. They're not easy to get. They're competitive, and that's part of what our company does, is help groom businesses and nonprofits. About half of our work is in nonprofits. About a third of our work is for women-owned businesses, and the rest is with veteran or minority-owned businesses. So we get to see a tremendous spectrum of people in every stage of business, from early stage to 3, 4, 5 years, and they're at multi-millions in revenue. Those are all wonderful. What we do is 4 things, actually 3 things, but there's 4 I want to put on there. We help prepare businesses for grants. They're competitive, as I said. We run each of our prospective clients through a 5-step process that's disclosed in here. We'll go into that in some detail. That's pretty good to know. When we get people that approach us that have written or applied for grants, there's usually a pretty low batting average, pretty low success rate. And there's some very good reasons for that. I had a customer call me about 2, 3 weeks ago. He said, I've written 80 grants and I've not gotten one. And so I asked him certain questions, for example, about alignment. In grant world, the most important element is the alignment between the foundation and the recipient. Foundations have very clearly specified ideas of what they think is good in the world. And they're equipped both with advice and with capital to help that happen. So they're looking for organizations, for small businesses and for nonprofits that line up with their mission statement. It's very clear. That's the most important thing. So that was the question I asked this individual. That no, he hadn't given that any thought at all. If they had a grant, he applied for it. And that's a really great way to burn up 2 years, I think, to do 80 grants. It's hard work, it's grinding work, and that's really important. The second most important thing is what's called package compliance. There are 2 kinds of grants, at least that we're aware of and that we work with. One are federal grants, which is kind of the same as a state, local, county grant. It's the same stream of money. Those are project-based. I don't know why they call them grants, because you have to resolve a problem for them. Fix something, deliver something, resolve an issue. That's what federal money is for. Foundation grants are mission-based grants. Those are mostly families. There's 86,000 foundations in the United States. It's a staggering number. 3/4 or more of those foundations are family money. 50, 10, 100 million, 500 million. It's pretty considerable, and they're excellent. They're very shrewd at managing money. They don't want to manage your business, but they want to see if you'll be responsible with that allocation of funding, and does what you think is important, is that line up with them? If those 2 things are there, then there's package compliance. They'll ask questions like, as a woman, what inspired you to get into this business? Please give us a 350-word answer. So it better be about 348 words, because you'll see something like, oh, because my mom did and it was fun. Well, that's not going to get you there. So on an average foundation grant, there's about 60 questions. The first 20 are what we call tick boxes: name, address, number of people, EIN number, things like that. They're kind of dry questions. The last 40 are essay-based. That's what carries the strength and the story of the foundation. We use artificial intelligence to do that. And that does a number of interesting things for us. So one is it takes about 40 hours to write a grant, give or take, on average. Sometimes more, sometimes less. Federal grants, many times more than that. But foundation-based grants take about 40 hours. With AI and with the tools we have, we do them in about 2. So artificial intelligence is really, really important to us. So when we take a foundation grant application, we pull all the questions out of it, we put it in a Word document. And then when the application says, that same question, please tell us what inspired you as a woman to get involved in this business. Then we take a copy of the mission statement of the foundation. We take a copy of the actual question in the application. And then 2 or 3 things about the business, sometimes from the website, sometimes from interviews we have with the people. We roll that into ChatGPT, and you process that several times, and then we get an answer that's really pretty amazing. It does 2 key things. One, it loads it with keywords. So the answer points back to the mission statement. Second, is that the general answer in general points back to the mission statement, so that when the adjudicators, those who are reading your package, they go, oh wow, this entity seems to really get what we do. This is good. That goes into the next good pile. And that's really important to us. The third thing it gives us is blazing speed. So I'd have to hire 3 or 4 more people than I have now just to do this if we didn't use AI. How many of you are familiar with ChatGPT and use it fairly? Some of you? That's great. That's a really powerful tool. It's not going to steal your soul. It's not going to take your job. The word generative in there means when you write down 3 or 4 or 5 words, generative means it statistically knows what the next 5 words are. And it gathers those out of a staggeringly immense database. That's how it works, and it works really well. Now, AI doesn't relieve you of the ability to write well. The better the writer you are, the better the response you're going to get. So when we have these AI-generated responses, they go through 3 human interviews. One by our grant writers. Both of our lead grant writers have doctorates, which is cool. But what I really like about that is that they have peer review level writing capability. They're just phenomenal. I look at it second, mostly from a strategy perspective, because I usually know the customers a little better than the grant writers do. So I'll make sure that, oh, did you know that this company gives back to the community in this way, and this is how we do it. So let's fold that into the answer. Foundations ask that all the time. How are you helping your community now? And if you're not, it's a good idea to think about finding ways to use your business to give back to the community. You can respond with, well, with the grant money, we plan to X, and they'll hold you to that. That's a good way to do it, but it looks better if you've already been associated and doing things in your community for 1 or 2 or 3 years. That's a very good thing. Our job is to find, write, and manage grants. There are a considerable number of them. As I said, there's 86,000. On the federal side, in certain cases, we recommend federal grants, but only if the business has been around for 2 or 3 years and has more than $1 million in revenue. There's nothing magic about the $1 million in revenue except this. You'll have people, policies, and procedures in place so you can handle that kind of cash flow and sales and customer service problems. That's a more mature organization. Those you can use for federal grants. They're much, much harder to apply for, but by that same virtue, there's also a better win rate because that onerous application process tends to filter out a lot of people. So if you can get through that and do a great package, you've got a better chance of getting it. The other thing about foundations and grants is that statistically, we know this from our own research, there's a difference in recurring grant recipients and first-time grant recipients. By far, most grant recipients have won an award with that foundation before, like a factor of about 5 to 1 on average. It's one of the things we use, one of the measurements we use to select, to do the curation process to match the foundation to the recipient. That's actually really important. So if you win one, the idea of a grant program in a small business or a nonprofit is to win 1 or 2 or 3 of these recurring awards. That changes things. It's not easy to do, it's not quick to do, but it changes things immensely because the allocation of that grant fund is about roughly equal to 50% of your current year's operating expenses. There's lots of ways to break that rule carefully and well, but that's kind of an idea. So if you think, if you're on your operation, if you're getting an allocation annually, roughly that much, that puts a lot of stress on you to have a more mature, executable growth plan, but it's a pretty wonderful and amazing thing. And that's the idea of a grant program in a small business or a nonprofit to win 1 or 2 or 3. Then the issue becomes to manage that relationship, because remember I said the recurrence rate is about 5 to 1. So if you win one, you want to build that relationship. Almost all foundations say, please turn in this report in 12 months. You usually get about 12 months to use the funds. We wouldn't do that. We send in, that's why we manage them. We send in monthly reports with key performance indicators, and we know enough about the grant that if they're about helping women in business, look, we hired more women. Look, we served more women. Look, we did. You put that in there. So when the year goes up and you reapply, you'll still reapply through the public domain, but you're already earmarked. You're already on the second round. Having that relationship, using normal relationship building tools and things that we all know how to do, that's how you do that. That's one of the keys to making it work. Incorporating grants into a capital expansion program is really important. We work with Julian on some of their customers, and we like to do that. Some customers are not ready for lower price banking services and products. That's part of what we get to do for 6 months to a year, is help build that up with an infusion of capital. We also comb out their business. We do a lot of that. Probably a third of everything we do is helping a business through this 5-step application, this 5-step assessment. And the one that gets them, there's one particular that almost gets all of them. We'll point that out. I just want to show a quick picture of our team. A year and a half ago, it was just me. I was writing them. I was doing the sales. I was trying to find people like Julian, and it was Julian, pardon me. It was a lot of work. And a really smart guy said, you know, if I was you, I would build out your business. Don't worry so much about the technical piece. And that was phenomenal advice. There's another person that's not on here now, so there's 8 of us now. And they're an incredible team. They're hardworking, they're driven. Both of my grant writers on the bottom right have doctorates. They're just phenomenal people to work with. So it's a joy to be with them every day, no kidding. Here's 4 fast facts about grants. We already said about government grants being project-based, foundations and mission-based. They take about 90 days from the time you apply to the time you get what's called either a notice of award or a rejection letter. It takes about 90 days on average. And so you can reapply a lot of the times to some foundations. If you don't get it the first time, you can also contact them and say, what are you really looking for? That's hard to do. That's rare to do. The 990 IRS form lists who they are, but you may or may not get to them. So we try to learn and take those opportunities as much as we can, take them out for a meal or something and get to know them. We want to know how they get a winner. In some grants, there is just such an overabundance of applications, it's kind of a lottery. When you hear on NPR radio, they go, the Donald T. and Catherine T. MacArthur Foundation. Well, they get about 10,000 applicants per grant. It's a lottery. So we avoid them. Have you ever heard of a 990 form, an IRS 990 form? It's a form that the IRS requires a foundation to fill out every year to retain their 501c3 status. And that's a public document. And in grant world, we have access to that. So do you, actually. And one of the things that we look at is, do they have a marketing budget? If they do, we put them on the B pile. It just attracts too many moths to the flame. So the things that we can control are the alignment between the foundation and the recipient, the quality of the package, the words, the answers. That's called package compliance. And third is which foundation we select. That's part of our curation process. I won't tell you how we do it because it's kind of boring, but there's 4 steps that we use to line up the mission and to qualify a foundation. We're very, very careful about that. And that's why we go through that. So most operations don't have in-house grant people. And when you see them in mid-sized nonprofits, if they're a grant person, they're also doing 2 or 3 or 5 or 10 other things. And that's how our company came to be. Because they'll say, we love to, we know how to do it, we're oversubscribed, and so we take that on for them. Our job is to become the grant department for mid-sized and up nonprofits, and also to do the same on a smaller basis for small businesses. We love to do that. We have 3 packages. One is what we call an all-pro turnkey package, where we find and write and manage the grant. And then there's another package, a middle package, where we'll provide 5 grants to you that you write, because it's a lot cheaper. It's about a quarter of the price. And then what you do, the secret that we use, is we go find college graduates to write them. That's how we do it. They're really good at it. They're good at AI. They can do it in 5 to 8 hours. And you can pay them whatever you can negotiate with them, but that's a good way to do it. We have a great relationship with UTD and A&M Commerce, and so we hire their grad students and their postdocs, and that's how we got a couple of our people, and they're phenomenal. So they're pre-vetted before I get them, and so I just check for the normal things that work. We give them a test project to see if they can do the work or not and see what they're like to live with, but we tell them up front, here's a test project, we get 10 days, and then we'll sit down and decide if this is a good fit for you or not. And so we got 5 out of 7. That's pretty good. And I think one of the things that I've learned about being in business a long time is to fail quickly. If it's not going to work, don't put a Band-Aid on it. Move on. Just in the nicest way as you can, but that's good for them and it's good for you. What can you use grant funds for? Anything on, Julian talked about P&L sheets. Anything on the L side, the liability side, anything that's on there, you can use a grant for that. So anything for marketing, for tooling, there are capital expansion grants. 2 of the largest projects we worked on, one was 11 million, one is 6 million. Those are for faith-based campuses. They were buying land and buildings. So it doesn't have to be really small. Probably if you look at that 80% bell curve in small businesses, probably between 25 and 80 grand. Most of them fit under it, but has a really long nose and a really long tail. We generally don't do programs under 25 grand because it's as much work to get 25 grand as 100 grand as $500,000. It's the same amount of work from our perspective. We also want to make sure that the business is ready to have kind of a burst of acceleration through that. So that's part of the assessment process. Now we talked about the size of the grant being roughly equal to half. That's a number that I made up. I figured, how can we do that? But there's lots of ways to break that. If the business is 3 or 4 years old, they're very mature, they're making $1 million or more, then we can change that ratio quite a bit. But that's a good place to start. Anywhere from 25 to 75K is a pretty meaningful number. So top uses for grants, hiring of personnel. Almost half of all grants that are awarded are used for hiring people. That's great, especially in nonprofits. You'll find it's all volunteer, and they struggle to kind of run like a business. A nonprofit is a business in every sense of the word. They're also surrounded by an ecosystem of for-profit entities. They're selling them power and light and product and all the normal things that we use in a business. So hiring of personnel lets them have someone dedicate to certain roles within the nonprofits. Marketing is the second. Hiring is about half of all funds awarded. Marketing is about a quarter, and the rest is either for inventory or equipment. If the small business has a product, then we use that capital for supply chain augmentation, greater volume, better people, stuff like that. If it's a service-oriented company, then we use it to build out their IT, better tablets, better connection, higher speed, those sort of simple things. That's where almost all grant use is for. Here's the assessment test, and then we'll kind of move toward a wind-up. There are 5 things you need as a small business owner to be competitive for a grant. One is a logo, and it has to be a pro grade. So you can do your own logos. The first one I did for our business, it was from an AI-generated logo. It's called logodesign.net. You can go there, put in a few things, it'll kick out a logo, $35, you're done, you've got the art. That's a good way to start. But as you grow, you're going to want to take someone and have it like the kind of logo on this top right-hand corner. That was done by a pro, and it's just so much nicer. Also, the artwork you get with it can be deployed more technically by people that use your website and your print stuff and things that you print your logo on. It's a different level with a pro-grade logo. Website, you got to have a website. We all have that now, but it has to be a fairly decent website that works well. Foundations always ask for social media presence. You need to have at least 3 social media partners, 3 handles on there, and they link them. And LinkedIn counts as one, so you can do Instagram, Facebook, or et cetera on there. But they ask for that, and they'll go visit them. Financial controls is what I referred to earlier. This is the one that catches most of our small businesses. About a quarter of the time, they'll say, well, actually, all our receipts are in a shoebox, and I turn them in once a year to our tax person. That's okay, but I can't apply on your behalf for a grant for that, not that way. Because foundations 100% of the time ask for a P&L statement or 2 years of P&L statements. They don't want to look at the ratios. They're not going to advise you on that. But what they're looking for is pro-grade financial controls. If we were going to give an allocation of $50,000 or $80,000, could you track that, manage it, and report on that? That's why they want that. There's one more key reason for that. Foundations are very clever about tax law. These are 100, 500 million allocations. And they're very clever. They do not want to pay any more in federal taxes than you absolutely have to. By law, that's what they do. But also your own accountant or your bookkeeper has to have the same mentality. If they just think it's income, you just chopped off 30% of it. So those pro-grade financial controls, before the allocation is made, they'll talk with them. This is how we're going to do it. You good to go on that? And the answer is usually yes on that. So, and then plan for fund usage. It's amazing. I would say 80% of the people we work with don't have a growth plan. Not down to the level of like, what would you do with $50,000? What would you do with $100,000? They don't. So we encourage them to write that. We can write them. We often do write them with AI. They do a really good job on that. But it's better if you own it and you write it. Bankability. This is actually sort of the money slide, then we'll conclude. Grants, part of our job is to position small businesses for low-cost loans and products, services and products from banks. That's what we do. We see ourselves on a continuum. You can start with grants, but we want you to go see Julian and use his products, and we want to help graduate you to that business. We can still do loans, on a recurring basis after that, but we want you to have a traditional banking relationship with a personal banker. A grant allocation is viewed by almost all accounting people as an asset. It's a very powerful thing. Suddenly you've got this pile of money and you can turn that into other things, but it's an asset. Grants are a business accelerant. They're not an emergency parachute. They're not an escape hatch. If the business is just struggling, you're probably not a good candidate. There's things you need to do in place to be stable and growing. Those are the partners that people want to invest in. Use the word invest, but to allocate funds for that. And grant competitiveness is the same as business resilience. Okay, takeaways. Pool of grants is enormous. The alignment of the grantor between the grantor and grantee is critical. It's job one. You can go do this. You can Google them. You can use tools that we use, and I'm happy to tell you what tools that we have. Facets, being a woman-owned, a minority, a veteran, those are called facets. And they're very powerful in grant world because they do two things. They reduce the competition for that allocation, and they also tighten the mission alignment. That's a really cool thing, so be grant ready. So, questions, and then I have a fabulous tax-free prize. Any questions? Yes, ma'am.
I thought I heard you say that if the organization, the company has a marketing plan, that it causes the whole application to get kind of moved to pile B. Is that misunderstanding?
If the foundation advertises that they have a grant, that attracts a lot of people. So we put that foundation in the B pile, not the applicant. Yeah, we're filtering for it. We're checking the foundations to match. That's job one. So if the foundation, it's only like 3% of the time, but we check it every single time.
And the idea is if they advertise that they have grants available, then they get so much traction.
Yeah, it's a lottery at that point. Yeah, like the MacArthur Foundation, 10,000 plus applicants.
Yeah, makes sense.
Even if you've got a perfect package, you've got a 1 in 10K chance. And the truth about foundations is they don't go through all 10,000. They go through the first pile until they find the number of allocations, 2, 5, or 10, and then they're done. And you may or may not get elected. Yeah, that's a very great possibility.
I was overthinking what you said.
No, it's okay. It's a great question. Yes, ma'am.
Good morning. Yes, from the little that I got a lot.
Great.
Thank you so much.
You're welcome.
You mentioned about the grant pre-assessment items, and the question that I have for the social media presence. Do you have to have presence on all social medias, or which one do you recommend?
Instagram, LinkedIn, and Facebook. Any three will do. If you're in business, you really should have a LinkedIn presence anyway. That counts as one. Those are the three that we use most often. It's the ones that my company do. What I do is I write a blog every week. I have AI write it. And then I get a short, tiny URL, and I go to Instagram with the impact of businesses and bankability of grants for businesses. No more? ? Here. And then it takes them to the blog page and everything. And I do it in about an hour a week for all three. That's how I do it. And that seems to work pretty well.
Thanks.
All right. You're welcome. Okay. Here, you have to get the answer to win the tax-free prize. I'm going to ask Julian to select who this is. What? I only said this once and quickly. What is a facet in grant world? What's an example of a facet? Winner, yeah. Here's $25 tax-free money for you. You're very welcome. Yeah, I've got a contact there. So thanks very much for your time. It's really good to be with you. Enjoy the day.
It is 10 a.m., so thank you so much for being here today. Make sure to put the next one on your calendar. As always, these will be available for as a recording on our website, together with the first two as well here in just a little bit. So thank you all for being here, and thank you for interacting with our speakers, and we look forward to seeing you all the next time. Thank you.